Welcome to Domino's. This is where we connect the dots others miss. From the headline to your bank account, your gas tank, your paycheck. If that sounds useful, hit subscribe. Let's get into it. 3 things happened this week all at once, and nobody connected them. Oil surged 35%, the biggest weekly jump since 1983. America lost 92,000 jobs in a single month. And BlackRock, the largest asset manager on earth, quietly told its investors, you can't have your money back. Each one of those is a crisis. Together, they're a trap. And you're standing in it. Right now, your gas is more expensive. Your neighbor just got laid off. And somewhere in a glass tower you've never been inside, a fund manager is looking at your retirement account and deciding you don't get to touch it. 3 stories, 3 headlines, 3 different sections of the news. But here's what nobody told you. They're the same story. When oil goes up, your groceries go up. When your groceries go up, you stop spending. When you stop spending, the store down the street lays off 2 workers. When those workers try to pull money from their investments, the door is locked. That's not 3 crises. That's one machine. And every gear is turning right now. Let me show you how we got here. It started 11 days ago. Picture a gap in the ocean, 21 miles wide, between Iran and Oman. That's the Strait of Hormuz. Every single day, 20% of the world's oil squeezes through that gap. 1 in every 5 barrels. Your commute depends on it. Your heating bill depends on it. The price of the chicken in your fridge depends on it. 11 days ago, it went dark. Iran-linked forces started blocking every vessel that wasn't flying an Iranian flag. For 7 days and counting, the strait has been effectively shut. Every other tanker is rerouted or sitting still. The market's response was instant. Oil didn't creep up, it erupted. 35% in 1 week. Kuwait can't fulfill its oil contracts. They declared force majeure, the legal term for we literally cannot deliver what we promised. Iraq's exports collapsed. And Qatar's energy minister said something that should keep you up at night. If this continues, all Gulf production could stop. $150 a barrel. You're already paying 45 cents more per gallon than you were 2 weeks ago. That number hasn't stopped climbing. But here's what matters. Oil isn't just oil. Oil is everything. Oil is the price of moving every product in every store you walk into. That's the first domino, and it already fell. 5 days after Hormuz went dark, the government released the February jobs report. You expected bad. You didn't expect this. Minus 92,000. Not a slowdown, a contraction. The first negative print in years. Your chance of finding work just got harder. Your neighbor's chance just got worse. Unemployment jumped to 4.4%, and this number was calculated before the full oil shock hit consumer prices. March is going to be uglier. Where did the jobs go? Transportation lost 18,000. Ships aren't moving, so neither are the people who load them. Retail lost 15,000. You're buying less, so stores need fewer people. Manufacturing lost 12,000. Input costs were already rising before Hormuz even closed. Your car payment is harder to make. So is your neighbor's. Car repossessions are at record highs. Credit card delinquencies are climbing. And now the people who just lost their jobs are walking into a world where gas costs more, food costs more, and rent costs more. This isn't a labor market correction. This is a spending freeze. And a spending freeze is where the third crisis comes from. When you lose your job, you do what anyone would do. You go to your savings, you try to pull from your investments, you need cash. Now, in 2026, for millions of people, that means calling their broker and saying, I need to withdraw from my fund. And here's where the floor drops out. BlackRock just gated its $26 billion private credit fund. Gated means locked. Investors who want their money are being told, no, not now, maybe later. Your money is on your statement. You can see the number. You just can't touch it. And BlackRock isn't alone. Apollo, Ares, multiple major firms have done the same thing. They call it redemption gates, a mechanism that lets fund managers block withdrawals when too many people try to leave at once. From the fund's perspective, it makes sense. If everyone sells illiquid assets at the same time, prices crater and the fund collapses, so they lock the door to protect the fund. But from your perspective, you just lost your job, your mortgage is due, your gas bill doubled, and the money you saved for exactly this moment is sitting behind a locked door with your name on it. If this feels familiar, it should. June 2007, two Bear Stearns hedge funds froze redemptions. 18 months later, Lehman Brothers collapsed. The gates didn't cause the crash, but they were the first crack. And here's the part that should make your blood cold. Hedge funds aren't just gating, they're adding short positions. They're betting the market goes down while you're locked inside, unable to get out. They see what's coming and they're positioned for it. You're not. So here's the chain. Your chain, Hormuz closes, oil spikes, gas goes up, groceries go up, you spend less, the store lays off workers, those workers try to pull their savings, the fund locks them out. The locked capital can't flow back into the economy. There's no cushion for the next shock. And the next shock is already here, because when spending freezes, more businesses cut jobs. More jobs lost means more people trying to withdraw. More withdrawals means more gates. More gates means less capital. Less capital means slower recovery. Slower recovery means more layoffs. It's not a line. It's a loop. And right now, nobody's breaking it. There's one institution that could break this loop: the Federal Reserve. Cut rates, ease borrowing costs, give people room to breathe. That's what worked in 2008, in 2020, in every recession before. But the Fed can't cut because oil is pushing inflation higher. The next CPI report is going to show prices accelerating, not because you're buying more, but because it costs more to move everything you buy. If the Fed cuts into rising inflation, they lose the only weapon they have: credibility. If markets stop believing the Fed will fight inflation, long-term rates spike on their own. Your mortgage goes up, not down. The cure becomes the disease. So the Fed sits frozen. The one entity with the power to break the loop is watching from the sidelines with its hands tied behind its back. You're on your own. 3 roads from here, you need to know which one we're on. Road 1, Hormuz reopens. Diplomacy works. Oil drops back to $70. Gas stabilizes. February was a 1-month blip. The gates lift. You breathe. This is the best case. It requires a deal that nobody is currently negotiating. Road 2, the slow grind. Oil sits between $90 and $100 for months. Hiring freezes everywhere. You spend 3 to 5% less every quarter. Fund gates stay up. The Fed holds. We slide into a technical recession by Q3 2026. This is the most likely scenario. Road 3, escalation. The blockade spreads. Oil hits $150. Gas goes above $6. Layoffs accelerate. Multiple funds gate at once. Credit market seize. This is the tail risk. Unlikely. But 2 months ago, so was a 35% oil spike. 3 crises, 1 loop, 1 week. Hormuz locked your oil. The jobs report cracked the foundation. And BlackRock's gate That was the moment the emergency exit slammed shut while the building was still on fire. Here's what nobody on Wall Street will say out loud. This isn't three separate problems. This is one problem wearing three masks. Energy, jobs, capital. They're the same crisis hitting you from three directions at the same time. And every single one of them feeds the other two. So let me be direct with you. If you are sitting in a fund right now and you haven't checked whether your manager can get your money, check tonight. Not tomorrow, tonight. Because by the time you read about it in the headlines, the door is already closed. If you have a job, start acting like you don't. Build the cash reserve, cut the spending, you won't miss. Get aggressive about what you can control, because everything outside your front door is about to get very expensive and very uncertain. And if you're waiting for the Fed to ride in and save this, stop waiting. They're handcuffed by the same oil price that's draining your wallet. No rate cut is coming until inflation breaks. And inflation doesn't break until Hormuz reopens. And nobody is negotiating that deal. The dominoes are still falling. They don't care if you're ready. But now you know what's coming. And in a world where most people won't see it until it's too late, knowing is the only edge you've got. Use it. Protect yourself.